I'm Kim Snyder, and thank you so much for joining me for the Sane Crypto Podcast, the first cryptocurrency podcast for baby boomers investing for retirement. Most people believe that crypto assets are too risky for the average investor. I believe that the risk is in not investing, and that in fact, cryptocurrency may be the answer to near retirees' prayers. The trick is to structure our investment so that if the naysayers are right, we don't do irreparable harm to our nest egg. But if the believers are right, we make potentially life-changing money that could catapult us across that retirement finish line. The Sane Crypto Mastermind is my signature program for those who want cryptocurrency type returns but can't, won't, or don't have time to figure this all out and keep up with it on their own. If you'd like to learn more, I'd encourage you to join my free online training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further. And you can do that at sanecrypto.com/retirement. So this week we are once again going back to the listener mailbag. I love the listener mailbag. I got this email. It's been a couple days ago, maybe a week or so ago, from Doug in Florida. He says, "Love your podcast. Such a great way to introduce people to Bitcoin without all the hype that surrounds it." Thank you, Doug. He says, "My employer recently changed our health insurance plan, and I'm now able to easily invest in Bitcoin via the CXBTF fund in my HSA. If Bitcoin takes off, I think this would be a great way to take care of healthcare expenses in retirement and avoid capital gains taxes. The only difference I see between using an HSA instead of a Roth IRA is to avoid taxes. With the HSA, I need to use it only for health-related expenses. Do you think this is a good idea? Are there other drawbacks that I am missing?" I also got a different but related question around the same time from Jim. He says, "Hi, Kim. I just heard your podcast where you mentioned that you invest in GBTC in your IRA. Since a Roth IRA grows tax-free with no taxes upon withdrawal, it seems like a great idea to invest in GBTC in a Roth IRA, which I might open just for this investment. Is my thinking working here?" So these are awesome questions, guys. Let's dive in. So the first thing that we will do, as I often do, is to dissect questions just a little bit so we can be clear what we are talking about. So there are really three separate questions here. One is, if your plan allows it, should you invest your HSA, which means health savings account, in cryptocurrency? Number two, should you invest your IRA, in this case, a Roth IRA, in cryptocurrency? And number three, if the answer to either of those is yes, then what is the best way to do that? Should you invest in Bitcoin directly in GBTC or the newly available CXBTF that Doug mentioned? Now, there are obviously a few terms in here that you may or may not be familiar with, especially if you're not from the United States. And by the way, even though this question is kind of US-centric, don't tune out if you're from other countries, because I think that the broad learnings still apply, even if the specifics don't. So first, let's define an HSA. An HSA, meaning health savings account, paired with an HSA qualified health plan, allows you to make tax-free contributions to an FDIC-insured savings account up to $3,450 per year for an individual in 2018 and $6,900 per year for a family. And like an IRA, there's like a catch-up contribution. It's an extra $1,000 per year if you're over the age of 55. With an HSA, you own the account and all contributions, even if you change health plans, retire, or leave your employers. And unlike flexible spending accounts, the entire HSA balance rolls over each year, so there is no use it or lose it. So here's where Doug's question comes in. You can invest your HSA funds similar to an IRA, and the earnings are not taxed so long as they are used for qualified medical expenses. In addition, after age 65, you can use your HSA, much like a 401k or IRA, and withdraw funds for any purpose. They won't be tax-free like medical expenses are, but they are yours to use how you see fit. Now remember, Doug said in his question, the only difference I see between using an HSA instead of a Roth IRA is that to avoid taxes with the HSA, I need to use it only for health-related expenses. So that is almost correct. A Roth IRA is after-tax money that isn't taxed when you withdraw it after age 59 and 5 years, actually, or 59 and a half. An HSA is pre-tax money, which is even better. That isn't taxed at all if you spend it on qualified medical expenses, but is taxed if you want to spend it on anything else after age 65. So again, the medical expenses paid out of an HSA account are literally tax-free. Everything else is taxed somewhere along the way. And both the HSA and IRAs are subject to very big 20% penalties if you withdraw early. Now, again, back to Doug's question. He says, my employer recently changed our health insurance plan, and now I'm able to easily invest in Bitcoin via the CXBTF fund in my HSA. If Bitcoin takes off, of course, that presupposes it goes in one direction, not up, not down. Anyway, I digress. I think this would be a great way to take care of healthcare expenses in retirement and avoid capital gain taxes. All right, so he mentioned CXBTF. CXBTF is the ticker symbol for the Bitcoin Tracker 1 ETN. Say that 3 times fast. Which trades on the Swedish exchange, but is now available on a very limited basis as of recently here in the United States. It has been around for several years, but it is only recently that they've begun pricing it in US dollars and therefore available here in the US. It is a way to own Bitcoin indirectly within a standard brokerage account, very similar to GBTC, which we have discussed on previous episodes. The price, in theory, was just supposed to track with Bitcoin at a rate of 0.005 Bitcoin per share of the ETN. Now, we'll get into more of the pros and cons of GBTC versus CXBTF versus owning Bitcoin directly in a bit. But in the meantime, I would just encourage you to double check that it is really available in your HSA, Doug, because so far, the only mainstream brokerage firm to offer it, to my knowledge, is Fidelity. That's just within the last week. I've also heard rumors that E-Trade may offer it. Mine certainly doesn't. Most don't. So just because it's quoted by your brokerage firm doesn't mean that they'll allow you to buy and sell it. In fact, if you look in mine, there's even a buy and sell button, but you can't buy and sell it even though they quote it. And I'd be very, very surprised if it is available in your HSA when it's not even available in most taxable accounts. As my grandmother used to say, nothing's impossible, just highly improbable. But unless your HSA is with Fidelity, maybe I would be really, really surprised. But putting that aside for the moment, let's just imagine it is available. The bigger question is, should you do it? And my answer is no, you should not. Crypto assets are not a suitable investment in an HSA account because it breaks the rule that says you never invest money in cryptocurrency that is needed for other things, shorter term things, known things like college tuition or paying off credit cards. And oh, by the way, you never, ever borrow money to invest in cryptocurrency either. I know that's not what you're asking, but as long as we're on the topic, okay? So healthcare expenses are one of those things, very definitely. Not only that, I don't invest my own HSA in anything speculative, not just, I'm not just ruling out crypto assets, because the job of those funds is not to make you money. It is to pay your out-of-pocket healthcare expenses. And not only that, you should plan to leave them there throughout your entire lifetime, not thinking about spending them at age 65. And I'll tell you why. It's the same reason I have a huge long-term care policy, right? I don't invest that. I mean, not that you can, but you know my point. There is an old saw in investing, which is buy term and invest the rest. Meaning, it's always bad practice, and you're almost certainly making either a bad decision or being taken advantage of when you mix insurance and investing. Okay, so this is a piece of an insurance policy. It is not an investment, which is why it's only available in conjunction with a high deductible health insurance plan. The two go together. And here's what you are insuring against. And this is, I think, from the NIH report, if I'm not mistaken. It says, depending on the retiree's age, health condition, and expected lifetime, estimated future health care needs vary, but are predicted to amount to approximately $146,000 for an individual who's 65 years old and has an expected lifetime of 20 years. This includes costs not paid by Medicare. So that's the out-of-pocket non-Medicare portion. If the individual lives until she is 90, she will need $220,000 for healthcare costs. And if the retiree is suffering from a chronic condition, such as cancer or otherwise, expected healthcare costs will undoubtedly surpass $300,000. Now, so contrary to the way that these are being marketed, this is not a retirement plan. That is a benefit in the very, very off chance that you don't use those funds for medical expenses. But of course, no one makes money off of you if you aren't buying and selling, right? So you don't put that money at risk. And I would argue that if you want a Roth IRA, then open a Roth IRA and invest that. That is what it is for. But I personally would never put my own HSA in anything more speculative than, say, a money market fund or something like SHY, which is the ticker symbol for the iShares 1 to 3 year Treasury bond ETF, something like that. Okay, that I'm not going to lose that money. That is it. Now, just as an aside, okay, it's very hard to know from an email the context of a question. Not being Doug's financial advisor, of course, I can't know the specifics of his situation. So it may be that he is looking for an opportunity to treat his HSA like a pseudo Roth because he's over the income limits and can't open a traditional Roth, but wants the benefits. In that case, I would suggest that the better option is what is known as a backdoor Roth, which is, definitely beyond the scope of this podcast, but just, to give you a very quick summary, a backdoor Roth IRA allows you to get around income limits by converting some or all of a traditional IRA into a Roth IRA. Contributing directly to a Roth is restricted if your income's beyond these certain limits, but there are no income limits for conversions, which is why it's called a backdoor Roth, okay? And also, the amount of money that you can contribute to a Roth is normally limited, even if you can contribute, because you're under the income limits. But again, a backdoor Roth IRA has no limits on the amount of conversion. So you could, in theory, you'll have to pay the taxes when you do it, but you could convert $1 million traditional IRA to a $1 million Roth IRA. All right, so I'll link to some articles on backdoor Roths in the show notes, or you can just Google backdoor Roth and you'll find plenty of information on that. Which brings us now to Jim's question. He says, since a Roth IRA grows tax-free with no taxes upon withdrawal, it seems like a great idea to invest in GBTC in a Roth IRA, which I might open just for this investment. So the answer here is yes. You can absolutely invest in crypto assets in an IRA, but I have a few caveats, and GBTC may or may not be the best way to make that investment. First, the caveats. Now, again, it is hard to know context when you're just getting a question in an email. And Jim and I had a subsequent email exchange where he gave me more of his financial situation. But when I first read his email, two things kind of concerned me. One was that he capitalized the word great, as in, it seems like a great idea to invest in GBTC in a Roth IRA. And the other, right, smacks of irrational exuberance. And the other was that he mentioned opening a Roth specifically for that purpose. So, to the caveats, right? The very important caveat is that crypto assets, yes, you can and should invest in in an IRA, but crypto assets in total should not be more than 2% of your total investable assets, and they are just another asset class, albeit a new and exciting one, right? This should be part of a diversified investment portfolio designed to create sufficient financial resources for you to live potentially 30 years or more, subject to all the same rules. This should not be your only investment ever. And if you'd like, for more on how I think about crypto assets in terms of a diversified portfolio and where it fits in, I have a podcast for sure. I think a blog post specifically about that topic, but a podcast for sure, which I'll link to in the show notes. But I know for 100% positive that I discuss this very thing in detail in my free training, which is called How a Little Bit of Bitcoin Can Make Your Retirement Savings Go a Lot Further, which, if you're interested, you can find at sanecrypto.com/retirement. Sign up for that. I would love to see you there. So with that in mind, okay, I would argue that if you are eligible for a Roth, and you think it's a good idea for crypto assets, which it certainly can be, then you should have already had a Roth open for your other investments. What's good for the goose is good for the gander. Now, as for how to invest it, you have 3 options now, where before you only had 2. Well, maybe we'll call it 2.5. I would recommend you go back and listen to my podcasts with Jeff Vandrew about setting up a checkbook IRA to invest in crypto assets directly, meaning your IRA actually owns Bitcoin. There is also a podcast with Jordan Shepard, which I will link to, about using an individual 401k for the same purpose, which fewer people are eligible for, but can be even better if you qualify. Or you can just own either GBTC or CXBTF, which means you don't have to do anything special. You can just, you can buy these in your traditional brokerage account, your IRA at Schwab or Fidelity or wherever. Now, which one is the right answer is somewhat nuanced, and I would very definitely encourage you to do your own research and consult with your tax professional or financial advisor, as the implications here are very far reaching. But generally, if the amount that I'm going to be investing is sizable, my personal preference is to set up a self-directed IRA, which is what I have done, and own the crypto assets directly. Now, again, I would point you to previous articles and podcasts for more details, but the upside of this approach is control, lower fees, and no counterparty risk. The downside is that you will spend some money to set this structure up, more or less, depending on how much of it you feel up to doing yourself. And it is a pain, right? It involves setting up an LLC and, transfer from one custodian to the other, and annual reporting of your balances to the custodian, setting up bank accounts, it's stuff, right? So it's not going to be worth it if you're just investing a few $1,000s. On the other hand, chances are you can go to your IRA at most traditional brokerage firms and buy GBTC today, in 5 minutes, done, okay? Now, the thing I really, really dislike about GBTC is that it trades to a significant premium to Bitcoin, on average 42%, sometimes more, sometimes less, and that the price does not necessarily move exactly with Bitcoin. So there are days when Bitcoin goes up and GBTC goes down, for example, okay? So it is not completely correlated because of that premium. And what I mean by that premium is that, if I buy Bitcoin directly, okay, I can buy on average, 42% more Bitcoin with $1 than I can by buying GBTC. Plus, with GBTC, there are annual fees. I think they're 2%. There's brokerage commissions, etc. Okay, but for smaller investments in a retirement account, right? Up until now, that has really been the only option. But recently, as I mentioned earlier, CXBTF, again, the ticker symbol for the Bitcoin Tracker 1 ETN, which stands for Exchange Traded Note, not to be confused with ETF, Exchange Traded Fund, which F at the end of that symbol means foreign, meaning in this case it trades on the Swedish exchange. It is not a domestic ETN. But as of recently, they now price it in US dollars as well as, I think, euro and krona. So it's now available on a very limited basis as of recently here in the United States. Now, I would prefer to use that ETN over GBTC because it doesn't trade at a premium. One share of the ETN equals 0.005 Bitcoin. And it should capture something very close to the return of Bitcoin, less whatever fees. And I think there's like a 2.5% fee, annual fee. Now, unfortunately, for the moment at least, again, the only mainstream brokerage firm I know for sure that allows customers to buy it is Fidelity. And I've heard a rumor that E-Trade allows it, but I have not been able to confirm that. If you know of others, or as others come online, I'd love to hear about them, but that is it for the moment. Now, would I transfer all or some of my IRA to Fidelity to be able to buy CXBTF? I very well might. Just because we know that Fidelity is working on other crypto projects, and they are for sure the most crypto friendly, and I predict will be the first mainstream brokerage firm to allow the trading of, I should say maybe legacy brokerage firm to allow the trading of cryptocurrencies directly. But again, you have to ask yourself, based on the amounts that you plan to invest, whether the hassle is worth it. I personally believe that CXBTF is a serious threat to GBTC once it's more widely available. I'm not sure why, all things being equal, anyone would choose GBTC over the ETN. I mean, you're getting, anyway, it would make no sense. So so there we go. So we covered a lot of ground. So let me just try to summarize for you. So one, I would not and do not invest my HSA in cryptocurrency. Never mix insurance and investing. It's an easy rule to remember. 2, cryptocurrency is just another asset class, and it is broadly suitable for an IRA as part of a diversified retirement portfolio. But it shouldn't be more than 2% of your total investable assets, and it very definitely should not be your only investment. You must be diversified. Number 3, depending on how much you're going to invest, the ideal solution is a self-directed IRA, but that can be a total pain to set up and maintain. So for smaller dollar amounts, your options are GBTC or CXBTF through your traditional brokerage account. My preference is CXBTF when available, but for now it is really limited to Fidelity for sure, at least as of the date of this recording. A rumor to be E-Trade. I think Interactive Brokers may allow some of their high-end clients to buy it, but I'm not 100% sure about that, and definitely not all of them. So I hope that was helpful. If so, you could do me a great big favor in return, which is 1, to subscribe to the podcast so you don't miss a single episode, and 2, leave me a 5-star rating and a review with comments and feedback on iTunes. The reason we ask this is because it feeds the great iTunes algorithm gods. The more engagement that I have with the show, the more comments and ratings and subscribes we get as a percentage of downloads, the more people iTunes will show it to. If you don't get those things, it just goes gradually into a death spiral, never to be seen or heard from again. And by the way, you don't have to listen via iTunes to leave me a review on iTunes. You can just follow the link in the show notes. Leave a review wherever you get your podcasts, because every little bit helps. If you'd like to learn more about investing in crypto assets for retirement and my system for doing that, I recommend my free online training, which is, again, how a little bit of Bitcoin can make your retirement savings go a lot further. You can sign up for that at sanecrypto.com/retirement. I'd love to see you there. You can get the full show notes of this episode at sanecrypto.com/podcast, including links to the articles and resources about whether to invest your HSA, GBTC, Fidelity offering CXBTF, Backdoor Roths, and a lot more, in case you want to do a deeper dive on any of that, which I always encourage. And then finally, if you have a question about today's topic or anything else, just email me like Jim and Doug did. Thanks again for your questions, guys. You can do that at askkim@sanecrypto.com. I read and answer every email personally, as well as answer some of them here on the show. Everything I say on this show is for educational purposes only. Nothing should be considered investment advice. Past performance is no guarantee of future results. All investments involve risks, so do not, under any circumstances, invest money you can't afford to lose. That's it for me. I'm Kim Snyder. I'll be back next week. Until then, may the crypto gods continue to smile on us all.